Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about GMR Infrastructure, that whether this stock will ever perform or not and what you should do if you're holding this stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start with the analysis of GMR Infrastructure, here's a small request that kindly support me through Patreon, and even a $2 support will go a long way in helping me grow the channel here. And once I have more than 100 patrons, I'll definitely start with an educational course on YouTube for free, which would cover all my experiences of the last 8 years on investments and trading. Apart from that, you'll be able to view a lot of articles that I put weekly on trading, investments, and on different stock calls, and you can ask me questions directly at any point of time throughout the day with respect to your stocks or portfolio. So kindly visit the Patreon site. Now about GMR Infrastructure. This was established in 1978, and they provide infrastructure solutions on a national scale. So over the last 10-12 years, they have built a lot of projects with respect to roads, bridges, and malls, etc., and constructions of airports, railway platforms, railway lines, etc. Basically, between 2003 and 2007, GMR Infrastructure did pretty well, building up corporate houses and big business houses as the expansion went through with the multinational corporations. So there were many business hubs that GMR Infra were able to make, and many private, you can say, airports across India. They got orders for that, but they also built up a lot of leverage during that period because interest was the name of the game at that point of time, and infrastructure did well on the back of higher interest. But post the 2007-8 crisis in the US, which had percolated to India and many parts of the world, GMR Infrastructure was absolutely, you can say, it was all carnage in the company, and eventually later on by 2010-11, nobody was looking at GMR Infra, although they were having a very interesting, you can say, assets. And so asset light models is now the name of the game, and that is the reason why GMR Infra is not doing well. That is the prime reason why GMR Infra is in doldrums at the moment, because they have high debt and high interest costs. They get major orders from airports and bridges, have been under stress since 2015. In fact, GMR Infra has been under stress since 2009-10. Have undertaken enormous debt over the years, as I mentioned, but they have also now gone through a lot of debt reducing exercises and have been able to sell a lot of their assets in order to pay out debt. So that's why they are still floating. Otherwise, other companies in the infrastructure domain has already collapsed. The market cap of the company is just under 10,000 crores, so it is not a very small, you can say, company in that regard. If you look at the financials of the company, then you have sales which is up 7.5% for this quarter. This is Q3 FY20. But the PAT, if you see, it has again produced losses of 305 crores versus 411 crores. So a big loss-making company, extremely high debt of over 6,000 crores for the company, with an equity base, or you can say a market cap of around 7-8,000 crores. To have a debt of 6,500 crores is enormous, and there's no point talking about the return ratios because the company has not been in profits for a number of quarters so far. So if you look at the performance of the stock has underperformed over the last 5 years. They have produced huge losses, as I mentioned, and stock has done nothing in the last 5 years, more or less. So 15-16 rupees it has been trading, and it was trading at 15-16 rupees in early part of 2014. So over the last 6 years it has done virtually nothing, although not has fallen. It has not fallen that much, so it has not fallen like 80% from those 17-18 levels. it is hovering around those levels, so that if you can take it as a positive, you can. Airport infrastructure has stalled post what has taken place recently, and high leverage stocks are now out of favor. So that needs to be taken into consideration, that high leverage stocks are not quite in favor at the moment. And because of what has happened with the virus, etc., the infrastructure space has got hit very big, in a very big manner. And you have to consider this, that in 2016, because of demonetization, this sector was hit badly. In 2017, it accentuated with GST and norms of, you can say, black money, etc. So not much of a cash being used, and infrastructure requires a lot of cash deals that take place. So 17, it was hit due to that. And now with this virus thing, it has been totally gone out of business. So it's virtually zero sales at the moment in this space. So there are a number of problems. So 4% growth in, you can say, as a GDP will definitely affect infrastructure. And now with the problems that are taking place, we could be staring at 2% GDP growth for FY21. I'm talking about. So next year could be even worse. Next financial year, current situation will further hamper prospects, as I said, and compelling valuations are in top firms. So why would you look at something like GMR or GVK or any other infrastructure company, when top companies, even in the real estate, you can say, sector, are trading at very interesting valuations, and top most companies which are in the top 20 on the stock exchange are trading at 30-35% discount. So people would be looking at those companies rather than wanting to put in money in something like GMR. This downturn may continue for the next 3 years at least. And why I'm saying this is, next year will go totally, because many of the companies will suffer, not infrastructure. After that, we'll see a pickup in the consumption rather than the infrastructure. And I think infrastructure spending will begin only by 2022 end, or by 2023, if everything else becomes normal. And that is also something we need to watch at. And the government puts in a lot of effort on the ground to get the infrastructure going. Otherwise, I don't see this space doing well even in the next 3 to 5 years. Although the stock has fallen a lot, so it may not fall big time from these levels, but you'll not be able to make a lot of money. The only promoter in the stock is high promoter holding, and promoter holding has remained robust even in difficult times, and this is a good sign in GMR. So if you consider Lanco, GVK, GMR, and such companies, HCC, HDIL, I think this has been the best in those troubled companies. So in that regard, in terms of management quality, it is pretty good, but they need to get more projects, and they need to get some cash flows going in order to get their business going. And this has been a concern in the infrastructure space, with the kind of problems that are already taking place, that we could be in for a long haul with infrastructure and capital goods companies. So what needs to be done? A complete avoid at the moment. This is an example of what not to buy. So anything in high debt, anything in high losses, and not looking like coming through in the next 2-3 years, do not get into such companies. Look for consumption plays, and probably if things change on the ground, you might as well buy the stock at 30-35 rather than buying at 16. So let it double, and let things really get normal, and let things get very positive on the infrastructure front, and then get into the stock rather than getting stuck into GMR. So this was a video on GMR infrastructure. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.